As you mentioned, my name is Doug Howland. I am originally from Boston, Massachusetts. I've lived in Japan 20 years. Spent most of my career in investment banking. Most recently was at JP Morgan running capital markets. And then spent about 6 years within the SoftBank group and one of the SoftBank startups, a company called Japan Computer Vision, which actually didn't ultimately really work out and was folded back into SoftBank Group. And I'm now running overseas sales at Nada Hotel. With that, I would turn it over to you, Kyoko.
Thanks, Doug. My name's Kyoko Altman, and I'm an independent board director with emphasis on independent. I chair a global think tank called Influence Map, which leverages AI and does data analysis on the impact that finance and business have on climate change. I'm also an independent director for the Mekong Club, TMC. It's an international NGO that focuses on supply chains and human rights throughout supply chains, working with multinational firms. I was previously with Rakuten Group as part of the executive team as a shikko-yakuin and a board observer for Rakuten. As you know, Rakuten is basically a digital conglomerate with probably one of the most integrated fintech ecosystems in the world. And with that, over to Paul.
Thank you, Kyoko. We like to talk about Rakuten as the first fintech in Japan, but not the only one. You all got to meet my co-founder, Mark, just moments ago. I didn't realize I made the Winston Churchill peace sign so often in photos. Thank you for choosing them, Mark. So I am one of the founders and chief executive of Moneytree. We're a Japanese fintech startup. We work with large banks, fast-growing fintech startups like Upsider, Layer X. We are connected via API to effectively every bank in Japan. And we've become part of the infrastructure. As you saw, my co-founder, Mark, also was a founding member of the Fintech Association, amongst other things. I also serve as an external director for a mobility as a service company in Australia. I advise very early stage startup founders and also mid-stage. And this is an interesting panel because you've all served on many boards. And so I'm hoping to learn as much as I can share, maybe learn more. Over to you, Anju.
Thank you. I'm Anju Patwadan. I live in Singapore. And my current roles include independent board director roles at the bank in Saudi Arabia, crypto bank in Europe. I think you've seen their sponsorship thing on the lanyards. A large fintech company in California called Upgrade. Another AI company in the US, Deep Future Analytics. And a nonprofit in Singapore focused on women's rights and gender equality. These are my roles as independent director. I'm also on the global advisory group of Stanford University's DCI and a think tank in Washington, DC. Prior to that, I was working with a VC fund and I was living in the US, invested in a lot of fintech companies, early stage ABC, and I've been a board advisor and board observer for a lot of early stage companies. And prior to that, I worked with Citibank and Standard Chartered for a very long time, covering Asia and the Middle East.
Hi, everybody. My name is Angelina Kwan, and I am also a board director on a number of different boards, one of which is a very traditional Swiss Re, where I chair the audit committee. And I sit on other boards such as the Women's Foundation, which is the leading group in Hong Kong that empowers women and girls in Hong Kong. I also sit on the Ebenezer School of the Blind, which is the only school of the blind in Hong Kong. For my background in terms of fintech, I have been a career regulator with the SFC for 8 years, as well as setting up certain departments in the Hong Kong Exchanges and Clearing. I went on to be the global chief operating officer of BitMEX, and we were the largest digital asset futures company in the world at the time when I was there. And I went to get the licenses for HashKey, which was the second licensed digital asset firm. I now advise a number of digital asset firms, try to keep them out of trouble with regulators or governments, and I try to get them licenses, which I've been pretty successful in doing. Finally, my passion is in digital assets and payments and technology. So I think this is probably the most interesting area, and that's why I love consulting in the area. So thank you.
All right, thank you, Angelina. By the way, one thing that Mark emphasized, which I think rings very true, is the necessity, doesn't matter what country you're in, but basically it's a full-time occupation which can really weigh heavy on things outside, the startup. And with respect to that, that applies globally, but Kyoko, if you could talk a little bit about kind of Japan's specific advisory function.
Sure. So I'm an active member of the Women Corporate Directors a group, which is a global network of women corporate directors. I'm part of the Japan chapter, and so really looking at the space in terms of what's going on in Japan. And Japan's focus over the last few years has really been about the independence and diversity around board directors. Now, directors and advisors are different, and I think Andrew will speak to this a little bit later, but in terms of providing that insights on strategy or risk, the financials, independence and diversity are two critical factors that are applicable for both roles. And in Japan, the Corporate Governance Code was updated in 2021, mandating that Japanese companies must have 1/3 of their directors be independent. In the US, it's majority. In the UK, it's more than half. This is, of course, the FSA's goal as well, and Ariizumi-san will speak probably following our session around this. But their goal is to increase the number of independent directors. Torishimari yakukai no dokuritsei kyoka. And why is this so important? There are a couple factors. It prevents conflict of interest. Second, it reduces risk of fraud. Third, it prevents groupthink. That's linked to diversity as well. And as a result, fourthly, it strengthens investor trust. Now, founders, many of you might say, okay, I've already got VC advisors, I'm fine. But VC interests are not necessarily independent, and they may not necessarily align with your own interest. Firstly, because they may have different priorities. Secondly, their risk tolerance might be different. Thirdly, their financial incentives may not be exactly yours. They may prefer rapid expansion and an early exit that may not necessarily align with your sustainable, interests, which might be sustainable long-term growth. I think there are examples out there where this has been the case. SoftBank's WeWork had elements of this. FTX, Sam, SBF, had he had an independent director looking at what was going on, things might have been different.
He wouldn't have listened, I can tell you. I can
yeah.
firsthand tell you.
Okay,
Yes.
yeah. The second key focus for Japan has been diversity, and the Japanese government in 2023 set a goal for women to occupy at least 30% of executive positions, board roles at major firms by 2030. Currently, it's at 15%. Why? First, the diverse perspective reduces the blind spots. If everybody's from Todai and thinks the same way, when you have a crisis, you're not going to be able to think of different solutions. This is to avoid the echo chamber or groupthink. Kathy Matsui, former colleague of mine, former vice chair of Goldman Sachs in Japan, who now runs a VC, she did a whole research that shows greater gender diversity leads to higher financial returns. This study was conducted using Japanese companies, listed companies. Second reason for that diversity factor is stronger market insight, different geography, culture. So it's not just about gender, but these different perspectives can really help you think strategically. And I think it's particularly important for Japan startups wanting to grow through international expansion to have that different perspective, perhaps foreign perspective, when doing things. And Mercari is a very good example of this.
Thank you, Kyoko. Anji, would you want to just speak briefly about the difference between director and advisor?
Sure. Our panel is on the, our topic is Road to 100 Unicorns. So our target audience is early stage companies that aspire to be unicorns. And what they need is very, very different from what the established organizations or banks need. So we are not going to talk about the role of board directors. That was already covered in the earlier panel. It's more about what the role of board advisors is, or what do founders need, what do people like Mark and Paul need at an early stage. And typically, the director role has a legal liability and responsibility. Most of my director roles need regulatory approvals, especially if they are banks or regulated entities. But the advisor role is an informal role. When I advise early stage companies, it's often for very specific things. Being a CEO or a founder is a very lonely role. So often they need a mentor, or they just need somebody to be their sponsor, to be their spokesperson. Very often it's for the network. It's to leverage the advisor's network for finding talent or for finding a client. We heard Mark talk about how he wrote to so many organizations at an early stage. And I'm sure he used formal or informal network of advisors to reach out to potential clients. And most often, I'm approached by founders about fundraising. They want to do their next stage funding round. They want to know more about how should they go about planning for it, preparing for it. They want introductions to the right VCs who invest in their kind of companies. So it's as an advisor, it's as a mentor, it's for the network. And the last role that the advisors play often is in terms of providing credibility to the company. It's a transferred credibility. So if I'm an advisor to a company and I know them well, and I confidently go and tell people in my network that he's a good founder or she's a good founder and this is a good company to look at least people would, take a meeting. And when it comes to advisors, my personal view is it's not about diversity, it's not about gender, it's not about anything. It's just about going for an advisor who has the requisite knowledge or industry expertise or skill set for what you need at that point in time for your company to survive and thrive.
Great, thank you. Maybe Angelina and Paul perhaps talking about examples of where advisors have added value or sometimes maybe run into some difficulty, positive or negative.
I cannot agree more with what Anu and Kyoko just said in terms of the responsibilities of board as well as advisors. A good advisor also, besides opening doors, I have more of an operational background, so people that come to me actually want recommendations in terms of what advisors to use, what they should be thinking about, where they set up, how should they actually put together their license applications if they wish to either get a license or start operations in a new country. So a good advisor is exactly, if you have an advisor that's trusted by the regulators, it makes the life of a founder a lot easier. But founders really need to listen to their advisors and choose carefully, because if there's an advisor that doesn't tell a founder about something that could happen, and in the case of certain people in digital assets, they don't listen when, there might be an issue in terms of money laundering or operational issues, then it's really, really important that the founder, the advisor should be advising the board or the group of founders that, look, there's an issue, you need to settle this, or you may end up going to jail. And this is the hardest discussion point for me as an advisor, and I'm sure other advisors around this group, is to keep the founders out of trouble. And sometimes founders don't want to listen to this. And if you, as a founder, really hire good advisors, you should probably listen to them, because they probably have the background and could give you the advice as well as introductions that could independently also corroborate what they're saying. So a lot of times founders go, I've got these great advisors helping me, but you really need to listen to them because sometimes they're going to bring up some differences in opinions, and I think those differences are going to be very, very important. So just some thoughts.
What Angelina's saying resonates a lot more with my direct experience going from kind of a low to no pedigree founder for Japan. I already had an exit to Thomson Reuters, but it didn't quite carry much weight here, not being Japanese at the time. Things are a bit different. But what you're saying is much closer to what I've experienced. And now that, thanks to Mark and everyone else who's worked with us and for us over the past 10 plus years, we have some degree of status, and now we can sort of pay that forward, which is a big thing that board advisors can do. But I just want to address one thing, this whole road to 100 unicorns by 2027. I forgot this was the government policy, and I thought, why did Peter make this the theme for this all these sessions? We're not going to make it. There's only 2 years, less than 2 years left. They must be joking. So 100 unicorn. Sorry, go ahead.
That's what the last panel also said.
That's what they said. Yeah, it's
It said
like
2030.
Can we get a bit more time?
2030.
Maybe another 20 years. Look, I think aiming to be a unicorn is a bit of a misnomer because there are a lot of unicorns who, as Warren Buffett says, when the tide goes out, you'll find they're probably not wearing any swimsuits. So a board advisor does a really important thing from the early stage. At the early stage, if you're a first-time founder, you either are high pedigree or effectively no pedigree. I had some pedigree, had an exit, I'd done these things, but it didn't really count. And the competitor that Mark in the previous session was talking about, very high pedigree founder, very well-known family, very well-known companies. We're just some schmucks from overseas. Yeah. So that didn't count well for us. So we needed to borrow someone else's ladder. I used to talk about this with another analogy. I called it manufacturing credibility. So as Angelina points out, sorry, Anju, I think you said it. You can vouch for someone. You called it. I think,
true.
Doug, you called it a sponsor. I think so. You can lend them your trust. And I had a conversation with a founder today. I said, if I get into a meeting with you and someone we want to impress, and I get to introduce myself because he didn't give me time to introduce myself properly, it's not because I want to say, hey, I'm awesome. Look at me. It's like, no. I want them to see where I fit in. So when I say, you're really good, they'll listen more. So a board advisor will lend you credibility, and it gives you time to create your own. Aside from, of course, introductions, networks, all these good things that the ladies have talked about, establishing credibility, especially in Japan, is paramount.
I have to agree, but also just one warning, right? High pedigree. You have was it Theranos case where Elizabeth had Henry Kissinger on her board. That was high pedigree, but the problem with that was lack of expertise. He didn't bring any expertise in the medical world or the...
Very true. I was referring to, that's a really good point, and it's the first thing I thought was none of them knew anything about startups. They're generals and politicians. Yeah. But as a founder, as a first-time founder, if you're basically no pedigree because you're not high by default, then you need people who know people and who have established themselves, because otherwise there's no one to say, oh, look at Mark, he's really good. I'm Paul, by the way. We get confused. He's really good, because Mark can't say that for himself, and neither could I at the time.
And especially Japan, I think more than any other culture, this is true.
And I mean, if Anu went in, because she's got decades of banking experience, and she went in with you, and you had someone like me who has decades of regulatory experience, the two of us going in with you, we would have done our due diligence before, or else we wouldn't have put our reputations out there for you. So I think that's something where board advisors are really, really helpful. And I don't put out all the time either, and I'm sure none of us do this because we check and do due diligence, and we also hopefully help the company that needs help or the founder that needs help.
Absolutely.
In a way, I think you want a kind of a mixture, right? You want people who can kind of add credibility and open doors, but then also people who can really advise on how to run the business, whether it's compliance or legal or regulatory or whatever. Anju, do you have any, again, positive or kind of cautionary tale from your role as advisors over the years?
Yeah. So like Angelina said, we are all very picky about the companies where we choose to be board directors or board observers or advisors. I am very careful about being a director because of the legal liability and responsibility associated with it. I'm also picky about advisory and observer roles. And sometimes I just, when people want some advice on something and they offer equity and I'm like, no, it's such a small thing and I'll help you. And I'll give you a couple of examples. I had just moved back to Singapore from Silicon Valley in 2020, and someone I knew from before had started a company, AI company in the insurtech space, and really good, smart people, good company, but they were not able to raise their Series A. So they wanted some help on, what was wrong. And when I sat down with them, I realized that they were a B2B SaaS company, but they were so focused on revenue in terms of, one-off expenses. They would charge a very high implementation fee, which was counted as one-off revenue, and very low subscription revenue. They didn't understand the concept of ARR. They didn't understand that the VCs look for recurring revenue and not high one-off revenue, and that your valuations are a multiple of your ARR and not the absolute revenue. And that was a problem. So once we sat down and I explained the concept to them, I shared a couple of articles with them about ARR. Internally, then they had to pivot, and it's a big change. Changing your revenue model or pricing model is a big change. But once they were able to change it, it took them 6 to 9 months. They were able to raise their Series A, and then they did really well. They had a very successful exit 2 years ago. So I think this was an example of a small thing that they just hadn't thought of, and it made such a big difference to the company. And another example is a lot of lending companies that I meet. Quite often, they just want to get started. They're very eager to get started, and they end up using expensive equity for loans. It's absolutely the worst thing you can do. And they don't think, it's not that they don't think, they don't know of the concept of advance ratios and the funding cost. They don't factor that in. They don't realize that the bank lines will only be, say, 80% and 20% is still from equity, and that it could be a downward spiral if you don't pay attention to credit risk, because if the defaults go up, you can't raise money, and so on and so on. You're in a death spiral. But somehow, if you're not from the banking background or the lending background, I've been a chief risk officer. To me, it comes very naturally, but I realize that it doesn't come naturally to a lot of people. So often an advice like that at an early stage can be very helpful in terms of helping the company decide on which direction they want to go in. So these are very niche examples, but that's where an advisor can be very, very helpful to the company.
Well, I think the other thing that potentially, maybe Kyoko, you might comment on this, that quite often an advisor can be of assistance when there's the push-pull with private equity money. Because as I think you've said, there's differences. And I know Quantinuum, which spoke yesterday, have very clearly over the last 5 years made sure they did not take any VC money. Instead, they took money from Amgen, JP Morgan, Mitsui & Co., et cetera. So always with companies that could align and potentially do business together.
That's a conversation I have so often with the startups on whether to take money from strategics or VC or PE, because the terms are different, the rules are different, and how you prepare yourself for each of those is quite different.
And that's why a good advisor will be able to prepare the company and the founders in terms of how to talk to each one of them, from getting an auditor like one of the big four, or having at least their books and records in place. And that's a part of the whole system of starting up. Founders really need to get their books and records up and running, or else you're not going to be able to raise funding. And I think all of us here have had this experience in terms of advising people on that. So it's very important.
Did you get that advice?
Did I get bad advice, did you say? Not specifically. Not specifically. Have I gotten bad advice? That's a good question, though. I think the absence of good advice can be qualified as bad advice, but it's hard to fault someone for not knowing or maybe just not giving you that advice. Something I wanted to share that's maybe peculiar to Japan. There are a lot of board observers from the VC world because many of them don't want to take up their board appointment rights. So we have a couple of board appointment right shareholders. They observe, but they haven't taken it up. And so do we have an echo chamber internally? Well, they're watching. It's like that character in Monsters, Inc., you know, always watching. So they're always watching. But we do have arm's length external board advisors. They're the hardest to find as well. This is another thing about Japan, at least as a foreigner when we came here, not great networks. I imagine Japanese founders also suffer because the people that I know don't have the pick of the greatest board advisors or necessarily board members. Some of them have really good ones when they get to a certain size. But it's really hard to get people interested. So getting them on as a board advisor first is perhaps a safer way to get them used to, well, to figure out the risk profile. Like Angelina said, I'm not just going to advise anyone, Andrew as well, right? You get that gut feel of like, I shouldn't work with these people. Okay, that's like, this has happened, so therefore, no, we can't work together. Or, oh, well, that was a small mistake. I'll set them back on the right path. But if they keep doing it, so I think that board advisor role is an on-ramp to directors, but also it's very hard for people to find the right kind of human capital to put in place there, at least at the early to mid stage.
You know, one idea might be to tap into some of these board networks, groups that exist in Japan. There are quite a few from JBDN. This has many foreign board directors, aspiring board directors, advisors in that group that probably would be happy to get involved with a startup. There are other networks as well, but
I was just
That
going
is
to say.
interesting.
Oh, I was just going to say that in Hong Kong, I'm one of the founding directors of a group called Web3 Harbor. So what we're trying to do in Hong Kong is to make Hong Kong a Web3 harbor, to promote 100 unicorns, if not more, and bring them to Hong Kong in terms of Web3 businesses. And what we're doing is providing a space as well as help, friendship, support to actually grow the whole Web3 industry in Hong Kong. So that's something that maybe Japan might want to be thinking about associations that are specific to growing this type of business. And what we have is a conglomeration of really experienced people that are the founders that started this group. But we also have professional firms as well as people that have worked into the industry. And I think this networking is really, really important. You can get views and things like that, much like this conference right now. And I think that's why this conference is so integral for Japan. So they're probably going to have a few more of these to get people together. So sorry, I would totally agree with you.
Can I add something to it? I find that the risk appetite is very different for different companies. And depending on your own professional background and your own cultural context, you may or may not be the right fit for a startup. And I'll tell you, when I left banking 9 years ago, my risk appetites were very different. In the Asian context, it was only when I lived in Silicon Valley and I started working with early stage companies that I realized that, you know, what works in banking doesn't work for early stage companies. So when, you know, Mark was standing on stage and he was talking about the situation where he said, we are not going to pay rent. Now, if you ask a banker or a former banker who's on your board and you suggest this, they'll be, no, how can you do that? It's wrong, it's illegal, whatever, right? But I can tell you that during COVID, a lot of the early stage companies that I was involved with, we actually had this conversation at every board that please go and look up your contracts. Can you break the lease? If you default on the rent, what happens? Because survival is the most important thing. You know, in my previous bank, our tagline was here for good, and we all used to say internally that you have to be here first to be here for good, right? I mean, if you don't survive, then nothing else matters. There are some red lines, absolutely, like regulatory compliance and so on and so forth. But there's a lot of gray. And that gray in the early stage world is very different from the gray in a bank. And you just need to be mindful of the stage of the company and the cultural context of the company, and then tailor your advice accordingly.
Well, you know, picking up on one other thing, it seems to me that one thing, particularly to Japan, is I think it's very hard to become a unicorn if you're building your business purely based upon Japan. Japan is a big, very populous country, but it's much easier if you're building a business out of the United States and you're going global to become a unicorn. And I think one thing that advisors can help meaningfully on is building that bridge, to people in Hong Kong, Singapore, Silicon Valley, Boston, London, whatever that may be. And I've always said that I think there's a very small number of really interesting jobs in Japan connecting Japan with overseas. And that requires kind of a skill set of people who understand those things. When I was at JP Morgan, the challenge I used to always have is people calling up New York saying, all of our other clients in Asia Pacific are doing this. It's obvious you can make more money if you do that. And I said, listen, my personal opinion is that blatant desire to make money is less obvious in Japan. It's still there, but it's less obvious than some other driving factors. I mean, Kyoki, I don't know if you have any thoughts on that, but.
Well, just thinking about from those cultural differences when you're reaching out from Japan overseas. For example, just culturally, a Japanese person might say, I'm okay at this, whereas an American will say, I am the absolute best. And that when you're pitching ideas, that does make a difference in the reaction, the reception. And so oftentimes, I mean, in terms of advisory, there's a lot of technical things that can be advised, but even cultural, where how do you pitch and communicate, and that you need to understand different cultures.
We call it overcoming the discounting, because they're discounting whatever you say based on how overblown the local founders are. And so if you're coming in at like a Japanese level of humility, like, very kinkyo in Japanese, they'll discount you back from there as well. Like, wow, these guys really suck. You got to watch out.
Well, one debate I used to have with still have with my wife is that I said, traveling around Asia Pacific, you see Malaysia, truly Asia on CNN, or Korea, Land of the Morning Calm, or whatever. And so basically every country except for Japan advertises to get tourists to come in here. And when I mentioned this to my wife, she said, yes, but we're Japan, we're an amazing country, we're totally unique. And I said, yeah, but you have to market that. I mean, people kind of know that, but you have to actually go out and say it. So speaking as American, if you need someone to market, you should hire an American, I think, generally speaking. We can market anything.
The other country that a lot of people, or countries that a lot of people are going to now, especially out of Hong Kong, is actually Dubai, Abu Dhabi, and Saudi. And there's been a lot of success for unicorns and founders to go to the Middle East. And even my old firm, HKEX, has opened a representative office in Saudi now. And we're seeing that. So having good advisors that can help you navigate in terms of working in different countries as well as with different regimes is a very, very important area. Expertise we have here is already quite amazing in terms of the United States, but it's a whole new dimension of dealing with Dubai and Abu Dhabi and so on and so forth. But you're seeing more and more fund managers, both from locally, the Abu Dhabians and the Saudis, but you're also seeing international fund managers set up in that whole area, the Middle East. So that's another area to think about in terms of finding the right advisors that can get you in the door.
I want to, I could talk about the Middle East for a very long time, but I won't. I go to Saudi a lot. I want to actually challenge the title a little bit on the road to unicorns, because I very strongly feel that the aspiration should not be to become a unicorn. That's the wrong aspiration. In my mind, success is on when you have an exit. That's the success, right? So if you raised money at 10 million or 20 million or 30 million and from VCs and whatever, and you can exit at 300 million, I think that's a great success story. We don't hear too much about it, but in Silicon Valley, most of the exits in enterprise software world are the exits that happen at somewhere between 100 to 300 million valuation, and these are the companies that have raised maybe 25, 30 million max. The founders still have a lot of equity. The VCs make 7 to 10x. The founders make enough money. Everybody makes money, and it's a great exit. And it's also important because the buyers also have their own risk appetite on how much they want to spend on acquiring a company. And most software companies get acquired in that range. So to think that success is only if you become a unicorn is actually creating a wrong mindset, in my view.
Yeah. With that, actually, we've run out of our allocated time. So thank you very much, and we're all rooting for you to become unicorns here, make it 100. Peter, thank you very much for organizing this, and thank you for your time today.